Let's observe the implementation of the 50-period moving average strategy using an actual example with the Euro and USD currency pair. We will open a 5-minute trade with an investment of $500. What do we observe here? The price has crossed above our 50-period moving average, accompanied by bullish candles with minimal shadows indicating a strong support level. The 50-day moving average marks a line in the sand for traders holding positions through inevitable drawdowns. The strategy we employ when the price nears this inflection point often decides whether we walk away with a well-earned profit or a frustrating loss. Considering the consequences, it makes sense to improve our understanding about this price level as well as finding new ways to manage risk when it comes into play. The most common formula takes the last 50 price bars and divides by the total. This yields the 50-day simple moving average, or SMA, used by technicians for many decades. The calculation has been tweaked in many ways over the years as market players try to build a better mousetrap. The 50-day exponential moving average, EMA, offers the most popular variation responding to price movements more quickly than its simple-minded cousin. This extra speed in signal production defines a clear advantage over the slower version, making it a superior choice. Hello everyone, you're on my trading channel. My name is Mary and I can be your personal trader. I created this YouTube channel to share my experience with you, so make sure to subscribe because there will be a lot of interesting content here. If you want to participate in trading sessions with me and receive signals from me, then subscribe to my Telegram channel. The link to it is in the description. The 50-day EMA gives the technicians a seat in the 50-yard line, the perfect location to watch the entire playing field from midterm opportunities and natural counter swings after active trends, higher or lower. It's also neutral ground when price action is often misinterpreted by the majority. And as our contrary market proves over and over again, the most reliable signals tend to erupt when the majority is sitting in the wrong side of the action. There are dozens of ways to use the 50-day EMA in market strategies. It works as a reality check when a position hits the magic line after a rally or a sell-off. It has equal benefit in lower and higher time frames, applying the indicator to intraday charts or tracking long-term trends with the 50-week or 50-month version. Or play a game of pinball, trading oscillations between the 50-day EMA and longer-term 200-day EMA. It even works in the arcane world of market voodoo with 50/200-day crossovers signaling bullish golden crosses or bearish death crosses. Pullbacks. The 50-day EMA most often comes into play when you're positioned in a trend that turns against you in a natural counterswing or in reaction to an impulse that's dragging thousands of financial instruments along the right. It makes sense to place a stop just across the moving average because it represents intermediate support resistance in a downtrend that should hold under normal tape conditions. The problem with this reasoning is that it doesn't work as intended in our volatile modern markets. The 50 and 200-day EMAs have morphed from narrow lines into broad zones in the last 2 decades due to aggressive stop hunting. You need to consider how deep these violations will go before placing a stop or timing an entry at or near the moving average. Patience is key in these circumstances because testing at the 50-day EMA usually resolves with 3 to 4 price bars. The trick is to stay on the way until the reversal kicks in or the level breaks, yielding a price thrust against your position. The risk of getting it wrong will hurt your wallet. So how long should you stick around when the price tests the 50-day EMA? While there is no perfect way to avoid whipsaws, examining other technicals often pinpoints the exact extension of a reversal. For example, Intel returned to the January high in April and sold off to the 50-day EMA. It broke support, dropped to the 0.386 Fibonacci rally retracement, and bounced back to the following average in the next month. The stock regained support on the 3rd day and entered a recovery, completing a cup and handle breakout pattern. 50-day fractals. The moving average works just as well in lower and higher time frames. As a result, day traders will find benefit in placing 50-bar EMAs on 15 and 60-minute charts because they define natural endpoints for intraday oscillations. Just keep in mind that noise increases as time frame decreases, lowering its value on 5 and 1 minute charts. On the flip side, the indicator shows excellent reliability on weekly and monthly charts, often pinpointing exact turning points in corrections and long-term trends. This makes sense when considering that the 50-week EMA defines mean reversion over an entire year, while the 50-month EMA tracks more than 4 years of market activity, approaching the average length of a typical business cycle. Market timers can use these long-term moving averages to establish profitable positions lasting for months or years, while violations offer perfect levels to take profits and relocate capital into other long-term instruments. Apple set up an excellent buying opportunities at the 50-month EMA in 2009 and 2013. It broke moving average support in September 2008 and spent 5 months grinding sideways before remounting that level in April 2009, issuing a failure buy signal that yielded more than 80 points over 3 years. It tested the moving average a second time in 2013, spending 4 months building a double bottom that triggered a 100% rally into 2014. Note that the lows matched support perfectly, offering an incredible low-risk entry for patient market players. Let's observe the implementation of the 50-period moving average strategy using an actual example with the Euro and USD currency pair. We enter the trade immediately when it starts to rise to seize this opportunity, and then proceed with our analysis. We will open a 5-minute trade with an investment of $500. Currently, the conditions are perfect for this strategy. Let's even extend our trade duration to 6 minutes while the market is on the rise. Now, if we temporarily remove our indicators and then add them again, to do this, we go to Indicators, select EMA. For the settings, we need to specify EMA method, where we specify 50, and here we also set it to 50. What do we observe here? The price has crossed above our 50-period moving average, accompanied by bullish candles with minimal shadows indicating a strong support level. Thus, we may experience a minor pullback followed by a continuation of the upward trend. As we can see, a 50-period moving average has acted as support here, and as it rises, the market follows suit. We have noticed this, so now we simply wait for the current trade to conclude. Once the trade is profitable, we will lock in our gains. To reiterate, we entered the trade on the breakout of the 50-period moving average. Thus, we are eagerly anticipating the conclusion of this trade. Consequently, we're eagerly awaiting for the trade's conclusion. By the way, it's fascinating to explore other currency pairs at the moment. If we encounter a similar situation with excessive price fluctuations, I highly recommend refraining from entering a trade. Such situations involve back and forth movements, and we should only trade when we identify clear and perfect setups. We're seeking setups free from such noisy price movements. Unfortunately, there's also a lot of noise in this case. The Australian dollar and USD currency pair exhibits a similar situation. On the other hand, in the Euro and Japanese yen pair, there seems to be a rather good trading opportunity. We observe multiple bounces, the first bounce followed by another, and yet more bounces. There are quite a few bounces in total. The 50-period moving average worked exceptionally well here. As you can see, there are a total of 8 bounces. 1, 2, 3, 4, 5, 6, 7, 8. In this area, there is a considerable amount of noise. A significant amount of noise, actually. During such market conditions, it's best not to enter any trades. So if we encounter a similar pattern, we avoid trading that particular currency pair and move on to the next one. Here, the trading situation is also unfavorable. Let's continue searching. For instance, the Swiss franc and the Japanese yen here, there's quite an intriguing situation. We can observe that our 50 EMA has worked exceptionally well in the past, and it seems to be performing effectively again now. Here I would consider entering a short position because we couldn't break above it, A hammer candle with an elongated shadow was formed here. This candle formation indicates that a suitable entry point would be on the downside. I estimated a trade duration of around 4 minutes. However, we won't execute this trade as we're already involved in a trade with the Euro and USD, which is currently showing perfect performance. Nonetheless, let's continue monitoring this favorable entry situation. Overall, there is a lot of noise in this area, making the situation quite complex. Now let's see how the Euro and USD is faring. As we can see, we have broken above our EMA. We entered a long position and our execution of this trade has been flawless. Simply perfect. So let's wait for the remaining 1.5 minutes and lock in our gains. We have the final 8 seconds left with a difference of 34 pips. As we can see, there hasn't been a single trade that ended in a loss. No worries whatsoever. With the current strategy, we have made a clean profit of $425 from just one trade. The 50-day EMA identifies a natural mean reversion level for the intermediate time frame. It has numerous applications in price prediction, position choice, and strategy building. Traders, market timers, and investors all benefit from 50-day EMA study, making it an indispensable ingredient in your technical market analysis. Thank you for watching. Like and subscribe to the channel. If you want to participate in trading sessions with me and receive signals from me, then please subscribe to my Telegram channel. The link is in the description. My name is Mary, and I'm the best trader.